Hello, welcome to another video of the channel. Today we are going to talk about something essential for you who want to invest safely and conscientiously. So, the topic of today's video is how does the stock market work? So, if you've heard about NASDAQ, P3 and other exchanges around the world but never understood how it actually works, this video is for you. Let's cover from the basic concept of stock exchange and even how trades take place. So the question is, what is the stock market? A stock exchange is an organized environment where trading of financial assets such as stocks, commodities, bonds, government bonds, derivatives, and investment funds takes place. And exchanges exist to connect companies with investors, companies that need investment to investors who are willing to invest in a business, and that investment will always aim to have a financial return. Historically, stock exchanges emerged to facilitate trade and financing of companies, and nowadays they are an essential pillar in the world economy, issuing that companies receive investments, and investors can easily invest their capital in various businesses and thereby achieve financial return. Stock exchanges play very important roles in the global economy. They facilitate fundraising and are usually companies selling shares in order to raise money to expand the business. Another function is to provide liquidity. Investors can buy and sell shares very easily. This makes the investment much more accessible. It also helps determine the market price. Basically, supply and demand determine the price of an asset in real time. Another very important and very interesting function is that for a company, it is there available on a stock exchange. She is required to always issue reports. It has to always be very transparent, and this ensures the safety of investors. So, let's now talk about the major stock exchanges in the world. The first is the New York Stock Exchange, known as the New York Stock Exchange. What about this basic one? It really is the most famous stock exchange in the world. It is located on Wall Street in New York. It is the largest and most important stock exchange in the world. In it you can find companies like Apple, Microsoft and also Amazon. And it operates in a physical and also electronic trading system. Then there is NASDAQ. NASDAQ is an electronic exchange well known for assets of companies in the technology sector, such as Google, Facebook, Tesla, and others. Unlike the New York Stock Exchange, NASDAQ only operates electronically. Then there is the Tokyo Stock Exchange. This is the largest stock exchange in Asia, and in it, for example, we can find shares of companies such as Sony, Toyota, and also SoftBank. Then, in Europe, we have the London Stock Exchange, which is one of the oldest in the world, and it is very important because it serves as a financial center for many companies in Europe. Another very important one in Latin America is the well-known São Paulo Stock Exchange, today called B3. In it, we can have access to large companies such as Vale, Petrobras, among other large companies in the Brazilian market. Now that we know a little bit about the most important stock exchanges in the world, let's now try to understand how trading happens on a stock exchange. Trading takes place basically through stockbrokers, which are basically intermediaries between investors, and the buying and selling process basically works like this. You, as an investor, will open the broker's website or application. You will see there a list of shares you want to buy. You will define the amount of shares of the company you want to buy and also the amount you are willing to pay. The broker's role in this process is to submit this buy order to the stock exchange. Then the exchange finds a seller who is willing to sell at the price you want. The transaction is then carried out and the assets are transferred to the investor. This works in both cases, both when you want to buy, while you want to sell stocks or bonds, whatever. And this process nowadays happens in milliseconds. In the past, all of this was manual. All of this was non-automatic. In the 1980s, for example, you had to call your broker and he would trade on the stock exchange. So nowadays, with the smartphone, you can You can buy shares all over the world. And now you may be wondering, how are stock prices formed? Stock prices are formed in the same way that the price of a product in the supermarket is formed. It depends on the supply and demand for that stock. Let's say if a lot of people want to buy Tesla stock, for example, the price of that stock will go up. If no one wants to buy Tesla stock, the stock price will fall. Why? Because who does? Tesla shares and want to sell to get the money, you'll accept much lower prices. On the other hand, if everyone wants to buy Tesla stock, whoever owns that stock will always try to trade it at the highest price because we have more people willing to pay for that stock. As I said in the previous video, several factors influence the stock price. Without a company, for example, launching a new product or making a discovery that is quite innovative, it's in the media, people. They'll see that and they'll want to be a part of it. Now, for example, if a company does very badly, launches a product that is rejected in the market, the stock price of that company will probably fall because investors will see that there and will not feel safe staying in that business. A lot of times too, when changing a CEO of a company, the price tends to vary a bit. Why? Because it depends a lot on who will be that new president of the business, his history in other businesses as well, the way he runs the business. And we also have different types of buy and sell order, which are market order. When you decide to buy or sell by market order, it means that you are willing to buy or sell at the price that is at that exact moment, market price. So you should always be careful when buying or selling stock, because let's say you want to buy Microsoft stock, but you only want to buy that one. Stocks, when they are lower, when the stock price is not so high. If you choose to buy as a market order and the price is high, you will pay that price, which is the market price. So, if you want to set the buying and selling price of stocks or any other investment that belongs to the stock exchange, you should choose the limit order, which basically gives the investor the option to put the limit, buying and selling price we have as well. An option called a stop loss, which is basically an order that protects the investor against unexpected drops in the price of a stock. Basically, it is like this. Let's say I have shares of Samsung and those shares are quoted at 100 USD. I enter the broker's website and place the stop loss order. I will set a value, for example, 90 USD stop loss to protect my investment against unexpected price drops. What will happen to the broker's system if the share price reaches that certain level? The price will be fired a trigger that will sell the shares I want to sell on the stop loss option, and this is very important because it protects you against losses. What about the security of stock exchanges? Stock exchanges are highly supervised and regulated to ensure the safety of the transactions they are conducted. So, all stock exchanges in the world are supervised and regulated by state bodies. In the United States, who regulates and oversees the stock exchanges? There it is, the Securities and Exchange Commission, while in Europe, it is the European Security and Markets Authority, and in Brazil, the supervision is carried out by the CVM, which is the Securities Commission. Whenever you are going to start investing through a broker, you should check if that broker is authorized by the country's regulatory body. Never stop doing this, because this is one of the most important things to do when you start investing through a brokerage. So basically, to start investing in the stock exchange, you should look for a broker that has certification from the official body of the country you want to invest in. Some brokers allow you to invest in several other exchanges besides the one in your home country. After, you have to study the types of investment. Do not start investing if you do not understand the minimum about each type of investment. And to conclude, investing in the stock market is a great way. Building wealth and achieving financial freedom, however, requires knowledge and strategy. So now you understand how a stock market works. If you haven't seen the first video of this series, where I explained what stocks are, I highly advise you to watch it. You can easily find it in the playlist about investments. And if you like this content, I ask you to leave a like and share. Also subscribe to the channel. See you in the next video. Bye.